Meta shares tumbled as much as 19% in extended trading on Wednesday, wiping out more than $200 billion in market cap. That's despite the company reporting better than expected profit and revenue for the first quarter. Revenues rose 27% to $36.5 billion. That's just above analyst expectations of a rise to $36.2 billion. But Mark Zuckerberg started Meta's earnings call by talking about artificial intelligence and the metaverse. Meta's Reality Labs unit, which houses the company's hardware and software for development of the metaverse, continues to bleed cash. It reported sales of $440 million for the first quarter and $3.85 billion in losses. Meta's stock price almost tripled last year, and it's now up nearly 40% this year only. All that after a brutal 2022. And now let's bring in Wael Makkarem, the Exynos Financial Markets lead strategist, and he joins us now from Cyprus. Thank you very much for being with us today.
Very good morning.
Great. So what's happening to Meta, first of all, because we've seen very good results. We've seen the stock price actually climbing 40% this year only. What's the outlook?
Well, for Meta, we had a tremendous rally since November 22 drop. So in November 22, we're at 75% discount. And since then, they focused a lot. They've done some cost cuts, and also they focused on the core business. And this drove investors into the company, which had this amazing performance since November. What's been driving it is very, very solid advertising business, the one that they usually done. What weighed on the stock last night was just the expectations of raising capital expenses. So this would be around additional 5 billion, almost 5 billion. So this is a bit, it could be a bit tricky for investors. You just mentioned that that Meta spent around 3.85 billion on their augmented reality and VR and also AI, while still, of course, you will not expect revenues or at least profits from this business soon. So this is a bit tricky for investors. However, this is very normal in the core.
Right, that's interesting because the profits and revenues were actually pretty solid, right? But Zuckerberg somehow decided to focus on AI, on the businesses that essentially are not really making money. They are losing money. And that's essentially why we saw the share prices plummeting 19% despite very good results. Why do you think that Zuckerberg decided to focus on the AI front?
Well, this is part of Meta's strategy to be innovative and to be a leader in a tech industry. So it's very normal to just focus on this because now it's the talk of the town. AI is the new technology that everyone is focusing on. So they're trying to build new technologies, new products based on this technology. If they manage to win the race, they will secure strong profits and revenue for the next years to come. There's a big competition in this industry, and they want to invest heavily in it. They started doing in metaverse ahead of a lot of key market players. And if they do well in AI, also this will come back on the company with great profits on the long run. It's very normal to spend and invest strongly now in such industry in order to get the gains later on if everything goes well with the company's plans.
Interesting. And Meta is one of the so-called Magnificent Seven, stocks. So what do you expect for the future of Meta, not only for Meta, but for what concerns the competition that the company will have to face in the next few months and years?
Yes, indeed. Actually, for the stock price, we still expect a little bit of decline. It's fine to trade at around $380. So we're expecting around $380 to $500 range for the next a few quarters to come. When it comes about projections, Meta is expected to have a net profit of around 52 billion within by the end of 2024, which is super strong compared to previous years. And this is very optimistic for investors on the long term. When it comes to competition with ByteDance and TikTok, so the decision of the US government to take measures against TikTok, this could be a bit of helpful for Meta to have a bit of more breathing on this line of revenue that they're having. So in brief, it's still a strong, solid, good company. It's fine to have some drawdowns. These drawdowns are good entry points for investors on the long term.
Wael Makkarem, thank you very much for your analysis, and thank you for being with us this morning.
Thank you.